The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. Lewis, we're going to change the program just a slight bit today because we have our good friend John Jameson on the phone here, but I wanted to bring up the chart for Steve Wynn's company, Wynn Resorts, just to show you what's happened. There's been some problems, I guess, with, you know, the usual type stuff. But that's probably, I don't know how to respond to the question, but, you know, we did hit the 78% level up there at 205. That's the only thing I know about the Wynn stock. You know, Steve doesn't invite me to his parties anymore, so nothing I can do about it. We've got John Jameson on the line over in the UK. John, are you there?
I am, Larry, yes. Hello there. How are you doing?
Very good. Folks, John and I were chatting this weekend about a particular painting that was just sold, and I made a rather funny comment that I wouldn't even buy it at a garage sale, but it sold for $100 million. I'm going to put this up here to let you see it. John, you want to tell the folks what this painting is and a little bit of the story behind it and what's going on with the art market?
Oh, sure. You're talking about the Basquiat yesterday. Yeah, it's Jean-Michel Basquiat neo-expressionism painting, sold last year at Sotheby's last May for 110 million. Yeah. So the reason we were talking about it, do you want me to go into that, Larry? You want me to talk about
the
reason
why? Yeah, please do tell about what's happening in the art world, because I think, you know, it's related to assets, gold and Bitcoin and other stuff. So I think it'd be a good idea to do that.
Sure. Okay. Well, you know, obviously Bitcoin had a big run up last year and is now under a little bit of pressure. And Larry and I were talking about assets, and I noted that another asset class has something similar in common with Bitcoin, and that is art. And it might not be obvious that it is the case, but if you compare Bitcoin to the number of shares in Apple stock, for example, there's over 5 billion shares of Apple and 21 million potential Bitcoins. So if you look at art, the reason that we were talking about the Basquiat painting is that that painting, I'm not sure whether Larry has posted that so you guys can see it, but that painting was produced in 1980, and in 1981 you could have picked that up for around $1,500. Now it was sold at auction for $19,000 in 1984. And the point we were making is that's similar to the move Bitcoin's had this year, $1,500 to around 19,000. Now, you know, most of the Bitcoin's been under a lot of pressure, especially with the news. I mean, it's just everything's bearish. You can't. It's just, you know, it's a scam. It's going to nothing. You've had people like Warren Buffett come out and say it's going to end in tears. I mean, how can you compete with Warren, right? So when Warren says that's it, well, you know, that's that. So I was just thinking, well, let's have a think about another asset class that's rare, and that painting appeared at Sotheby's a couple of years ago and sold for around 50 million, and that's a pretty big jump from 19,000. And you were probably thinking, well, that is insane for a price, but art is used by the global elite to protect wealth, and basically the thinking is that when money goes underground, then when you have all the money you need, then it goes after rare assets, and it'll pay a lot for them, a lot to own them. So the reason that we were talking about that is because what if Bitcoin is shut down? You know, a lot of people are thinking, well, how am I going to get my Bitcoin back into the system? Well, maybe that's wrong thinking, Larry. Maybe in the future, you know, I'll be able to go and buy a house by simply proving, you know, through escrow that, yep, that bit of paper has this amount of Bitcoin on it, and that person will then sign the deeds of the house over, and I'll sign over the Bitcoin, and there's an asset swap. So what do you think of that?
Well, you certainly explained it to me, but gosh, when I look at that painting, I mean, that would scare children. And, my grandma said, don't ever buy anything that would scare a child. So I don't know how people could pay $100 and some million for that. I mean, I can understand someone paying 450 million for a Leonardo da Vinci, like the Arab Sheik did. But that painting, of course, art, my ability in art revolves around seeing the Elvis, paintings with the crushed velour background and his eyes move as you walk across the room. That's my idea of art, so I really don't understand. So I just wanted to bring you on the show to have you let the folks know that you are in the art world and you're looking at it as a store of wealth, and that's the same thing that some people are looking at, with Bitcoin and other cryptocurrencies, because they, given the negative news, they really haven't come down very much at all.
No, obviously it's still making lower highs. I would still love to see another shot down to complete that larger pattern at around 8,000 to scare out the non-believers. That would be my obviously the ideal move. But over time, because Bitcoin is a relatively rare asset, especially if it goes underground. I mean, can you think of any other commodity that goes underground? And when something goes underground, people will pay more for it. So
yeah, that's for sure.
Human nature, I guess. So yeah, I mean, yeah.
Well, listen, I want to thank you for coming on this morning, and we'll have you on again soon, and I'll be talking to you later today, okay?
Okay, that's great. Thanks for having me on.
Thanks a lot, folks. That's John Jameson from the Jameson Letter out of the UK. Folks, we have a big thing happening in the interest rate markets. We're going to bring this chart up from our good friend Mr. Z in the room to show you what's been happening to the Treasury notes. We've been talking about this for quite some time, and you'll notice here that we've had a pretty big breakdown now in the notes. In other words, they're going lower, interest rates are going higher. We've taken out the lows in the notes from 2014. So that tells us that we're most probably heading, we've been saying this for quite some time anyway, that we are heading for higher interest rates based on what's happening with the notes and bonds. These markets are incredibly oversold, so they could rally a few points, but that's just to take the pressure off of the selling. But pretty much, pretty much it. Yes, you're right, Mr. Bill. The dogs playing poker is one of my favorites. I'm just an old country boy from Indiana. We never had any of that kind of stuff. I do like to go to museums and see Rembrandts and stuff like that. But gosh, it's so far over my pay grade that I just don't understand it. But to see that painting for $118 million, I just wow! It just blew me away. I know Picasso, did some really weird stuff, but he was pretty popular all across Europe. So who knows? Anyway, we'll move on here to talk about some other things when the break comes up. We're going to have Norm Winsky on at the half hour because we have this big lunar eclipse tomorrow. We haven't had one like this since 1866, and that'll be a real interesting one to look at. I'll post the chart of what it looks like, and then when Norm comes on, he'll probably talk to us a little bit more about it. But this is a big deal with this new moon coming in here tomorrow. It starts, the effect of it could certainly start within today, into all the way into Wednesday. So we'll take a few minutes here, take a little break, pay a few bills, and we'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted the chart from the Russell 2000 looking at the last 4 lunar cycles that we've had, and you can see there's been some key turn dates that occurred during those times. This is totally different than we see in the Dow Jones Industrial Average or the NASDAQ, because those have basically been, parabolic moves, whereas the Russell, in fact, hasn't been doing that at all. So that could be something that would be to look at. If you want, in other words, if you're interested in selling something, you want to sell something that's the weakest. Don't sell the strongest, and the Russell 2000 is certainly the weakest of any of those. Getting back to what Mr. Z had posted to us on the Treasury notes, if we take a look here at the long-term Treasury note chart, you'll notice here that you'll see the same thing a little bit longer term going back to 2008. That tells us we're going to go down about another 7 handles before we even hit a 61% retracement. And, rates could certainly, back off from here because they're so oversold. But the longer term, this one certainly looks like it wants to go a whole lot lower. And remember, the Federal Reserve has been in there pumping quantitative easing, since 2009. So it's going to be, very, very interesting, to really watch that at, because the bonds certainly look bearish, but like I mentioned, they are very oversold. We're coming down to a relatively strong 1.618 expansion number in the bonds that comes in just a little below the 147 level. There's a 1.618 off of a previous swing that might give it some type of a rally, but frankly, longer term, it doesn't look that good. The safer trade would be what we were looking at just a week or two ago, is to sell that ABCD pattern we had at the 154 level, and here we are at 147. So it's had a pretty good break, into that. And here it is, bonds breaking and yet stocks going straight up. These are two different markets, folks. So you have to remember that when you're looking at some of these things, because it's very important to realize that these markets operate on different types of fundamentals, supposedly, and we'll see what's happening. Now, since we're talking about interest rates, we had a really nice rally in the utility index, which is very similar to, what we should have seen in the notes and bonds, but the notes and bonds didn't do that. Here again, we have another very bearish chart here where we've had a rally here of about 7 days, hasn't gone very far, and any move now below 678 in the Dow Jones Utilities is going to put further impetus on the fact that, we are going higher in interest rates. And, like I mentioned already, we don't know if that's going to affect the stock market at all because, we've had lower rates ever since 1982. That's when the interest rate market, finally started to go lower, i.e., bonds started to go higher. So we're going to see, where we're going to go from here. But, our average rates over the years have been around 4 or 5% for the 30-year bond. So whether we'll ever get to that level or not, I'm not really sure. Now, the other thing that we need to discuss here briefly is Bitcoin. I wanted to bring this up to show you because it looks to me like we're getting ready to, and just looking at this chart, folks, yes, Mr. Z, we're going to have Norm Winsky is going to be on at the half hour. But you'll notice here we have a potential ABCD forming here in the Bitstamp. We're trading around 11,700 and almost 12,000 this morning. So if it breaks below here, we're going to be looking at that level below 8,000. One thing to look at on this Bitcoin chart, folks, you'll notice that the daily ranges or the range of the bars that we're looking at here are really getting smaller and smaller. That tells you that there's a lot less players coming in. So that'll also increase to the volatility, but it's following technical analysis extremely well. If it breaks, it's going to go a lot lower, and if it has one really good strong day, up about $900 or $1,000 per share, that would tell us that we're probably getting ready for another leg up. But I don't believe this market is over. It could be, but we'll see. The big ABCD on the Bitcoin comes down around the 8,000 level, just a little bit below that. So whether we get there or not, we'll wait and see. Like John Jameson said, he's waiting for a washout in that area, and that's when he's going to be looking for opportunities to find some of these things. And remember, there's a whole lot of these cryptocurrencies out there. There's a total of well over 1,200 that they're looking at. I did want to bring someone asked me a question about Tesla, and so I'll bring this chart up to let you take a look at it. This is the daily chart on Tesla, and you can see we just completed a Gartley here 4 days ago up around the 362 level. Actually 361 was the exact high, and we've had a pretty good break from that level. So this stock is in a downtrend, of course, and this is the second ABCD pattern that we've had since November, and Gartley said look to sell those ABCD patterns in a bear market. So this tells us that we could be looking at a move in Tesla at least to 320, and if that breaks, you could be looking at the ABCD structure that would take you down to around 260 per share. And but that's a longer term forecast. Regarding the wind chart that I put up, folks, we had a request to take a look at that, but that's based on some of the stuff that's going on in the news now, and who knows about it. I don't know. Yes, there's a good pattern in sugar. If you'll give me a second here, I'll bring it up and we'll take a quick look at that, Mr. Z, because I did the newsletter for the you'll see here we've got a really nice pattern. This is the weekly chart here in sugar. And since the U.S. dollar has been under so much weakness, you might want to take a look at sugar in here at $13.36 a pound, because that completes the ABCD Gartley on the weekly chart. And risk here is very, very small. Your risk here would be about a cent or less, but it should hold that level. Right where we finished at 13.36 was the low last. 13.30 was the low, but we should hold that low if it's any good. Sugar was trading at 24 cents, way back last year in October, and here a year later, it's trading for half that price. So it's like all the other commodities, grains and stuff, they've gotten hit. But these things are starting to turn, folks. And whether it's related to the U.S. dollar or not, I'm not sure. Because as our dollar drops, that makes our stuff cheaper, and they'll sell more of it. So it'll make demand go higher, and that'll make prices go higher. But the grains, look at wheat. Wheat has certainly had a nice run off that big bottom that we looked at. I mean, it was, really spot on. Let's just take a look here at the wheat. I think I can get this up here without too much trouble. I mean, wheat has really had a good rally now, and we're ready for a little correction now, I would think, in the wheat, because we've completed the big ABCD pattern there, and I'm looking, because we got the lunar eclipse coming in tomorrow or today. That'll give it enough impetus down to take us down. But, I understand that wheat is actually stronger this morning, so that's actually taking that out. So it looks like it's going to be going higher, and that could be related to, what's going on in the plains with potential drought. So we're going to have Norm Winsky on at the break, so stay with us, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our friend Norm Winsky from Astro Trend on. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you, my friend. You're in the bucket, so go ahead and start the show.
All right. Hopefully you can see page 1 there, page 1 of my notes. I got my planetary index graph on here. There's several things that we can learn from this. I did this. Okay, first let's start. This is for the month of January, starting on January 2nd. The trading days are across the top of the chart there. I run this through Friday, February 2. And I drew this blue line you see on here a month ago. It was toward, like the 3rd week of December. And then as we go, I overlay the actual prices. The black bars are the Dow Jones 10-minute bars, and you can see so far that's working pretty well. There's a couple things we can learn from this. Now, I come on here often and talk about my favorite planetary events. My top 2 categories are when planets turn direct or retrograde. Those are called station points because, for a moment, looking at the planets from the point of view of the Earth, it appears momentarily that the planets stop their direction and then stop their motion and then change their direction. We can see one of these down here at the bottom left corner with Uranus. That's Uranus. The red arrow there is over the SD, stationary direct. That means the planet stopped its motion to turn and go forward. And there we go. So I was on your show there in late December and said, looking for a change in trend there. Let me explain a change in trend. I use the terminology change in trend because it's a little broader than looking for a change in direction. About 70% of the time or so, we do get a change in direction on these points. But about 20% of the time, you'll get an acceleration, and I'll show you the S&P chart in a minute here, and you'll see that's what happened there over the New Year's weekend. Then we rallied. I had my other one here. I was on your show last on the 11th of January, and my other big event is when the planets, as they go around the sun, they not only go round and round, but they also go up and down like horses on a carousel, and so they're oscillating up and down. And so when they get to that midpoint, that seems to be a very important energy point, a sort of a balance point, and that also can bring some of the same phenomena, change in trend. And if you're following the Bradley model, this is when your Bradley model gets flipped upside down and that sort of thing. And so that's why we're on alert at these points with these planetary events. So there you go. So you can see here we had, and now how do you trade this thing and manage your risk? I want to talk about that too. So you can't be stubborn. You come into these windows, these time windows, planetary windows, and you look for a change in trend. Most of the time over the history, they tend to be like a big magnet, and the market will run up to the high of the month or the low of the month, and then you get a big reversal occasionally when you get to we're in this crazy market here, the Trump rally. It's a very strong market, so we've had acceleration. They turn these into accelerations. So once you get into that window and a short-term high is established, if you take or a low, if you take out that point, that extreme, then you have to cover your position and flip around and go the other way, and that's what happened over here. We had a high on that, or a previous Friday, we had a big sell-off. Once you took out that high and you started going up, then you wanted to go the other way. So same thing here. We had the same thing here. This is very unusual, by the way, to have two of these in a row where you had an acceleration and not some sort of trend reversal. But anyway, that's what happened here. You established a short-term high right there on the right over that weekend there of the 12th on the morning of the 16th, and you did get a pullback, but once that tap was taken out, you had to go the other way, and then we got a big acceleration of the upside. Notice on the top right corner of my chart here, we have the big yellow square there with the lunar eclipse, and I guess I should talk about that now. Well, let me get back to that in just a minute. I want to show you the S&P chart here on page 2. You can see exactly what I'm talking about here on the daily S&P chart. We can see back on the end of December, January 1, you had a little pullback here. Then not only did the market continue its trend, it accelerated. You can see the angle is much steeper after that point. So, and we had the same thing in mid-January there with the Mercury at 0 latitude point. Not only did the trend resume, but I think to some degree the angle increased. So angle of ascent increased. So back to the lunar eclipse now. You were just mentioning that before the break. There's some information going around the internet saying that this is like a super duper supermoon lunar eclipse. It is not, because it doesn't land. It's close, but no cigar in lunar land, because it's not within 24 hours. It has to be perigee and a full moon and a lunar eclipse, all within 24-hour window, and this one does not do that. Now, we did have one of those back on the Sunday Sunday, September 27 of 2015. That was a fun weekend there. The market didn't look like anything particularly was going to happen. The market closed, I think, a little bit higher on that Friday. Everybody went home happy that weekend. But we had the super lunar eclipse that Sunday night about 10:30 at night. We came in the next morning, and the Dow Jones gapped down 300 points. If you go look, I don't think you'll have any problem finding that on your charts. So that's what a super lunar eclipse looks like. We only get one of those about once every 20 years. So this one's going to be close, but it's not technically officially in that category. But it is a lunar eclipse. And the stock market does not like lunar eclipses. I've researched these on, over a long time. Actually, a couple years ago, I had a very big name trader hire me to do research on this. He didn't believe me when I said, I worked this out on my $5 calculator, and here's what you're going to find. It says, it's 75% of the time, it works 75% of the time. It has to fall during the trading. The best time is if it falls during the trading week, not on a weekend. That tends to dissipate the energy. And 75% of the time, the major indices, such as your Dow Jones S&P, will probably drop about 1 3/4%. That's the average. So he went and hired a bunch of statisticians. They took months for them to do that. It took me a few hours on a $5 calculator to do it back in the 80s. And they kept having to correct them on how to do it and so forth. And finally, they got it together, and they came up with that 75% of the time, the market would drop about 1 3/4%. It's the same answer I had. So it's
for
kind of
$5.
Yeah, exactly. For $5, I'm sure he spent a small fortune. He paid me a consulting fee, and went out and hired a bunch of statisticians to do that. Mm-hmm. So anyway, there you go. So I have the big gap here with something, historically we don't get up until this past year, Larry. We don't usually get many gaps, and I seldom ever in my forecast, ever include a gap on my forecast. But in order to be true to this forecast, which is basically my version, Bradley, upside down, the whole, as you know, but Larry, that past year, most of the past year, everything is upside down. But who cares as long as you know what's working, right?
That's correct.
So that's it. So, we're all Australian now. All just stand on our head, right? So there you go. So in order to be true to this model here and put a sort of a gap opening in here, I had to flip the thing upside down so it looks like there's a gap up. I do remember, and I'm sure you remember, Larry, we did have a time where the market rallied into a lunar eclipse. That was October the 7th of 1987, and that did not turn out real pretty, right? Right.
I remember that one. I sure did.
That was the last rally peak before the October '87 crash, right?
Yeah.
So the lesson here is
we gotta pay a few bills, Norm.
Okay.
Stay with us. We'll be back with Norm Winsky of Astro 10, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Norm Winski of Astro Trend. Norm, why don't you go ahead and continue?
Okay, I'm jumping ahead now to page 3. I'm going to get back a mention on the lunar eclipse here in just a moment, but I wanted to point out, in addition to the lunar eclipse, we had a big cluster, or having a big cluster of planetary events over this weekend that we just got through, and that window for that it will include the Monday's opening right now. And so we have a whole bunch of stuff for the U.S. cycles. That's your U.S. financials, U.S. stocks, Treasury bonds, U.S. dollar, that sort of thing. And so we'll look for a change of trend in those items. And then we have another one coming up here on the after the close of the 29th. And then, of course, we have the full moon lunar eclipse. That's early Wednesday morning at about 8:30 in the morning. So I include that window as Tuesday's close, Wednesday's opening. And for a lunar eclipse, it's plus or minus one trading day for a possible, big volatility, possible probability for some, 1 to 2 day sharp correction, On my stock market analysis, I have some mathematical cycles coming together, Gann sort of thing. Gann liked the square numbers. He also talked about music in the markets. And so I do both of those things. He liked especially the odd squares, so that's 57 squared. It comes out to, over the weekend here, it was Saturday, I believe. We have 3,249 days. That's 57 squared from the March 6, 2009 low. On S&P was 666. That's a good laugh. And then we have the another date coming out for the 29th. That's today. On my music math, that's basically, it sounds a lot more complicated than it is. Just some taking the Pythagorean mathematics behind music and applying those harmonics. And we also, that's also connected to March the 6th and 9th. And that comes out for today. So we have a big mathematical cycle harmonic cluster for now. Also, the astrological analysis on turning points, the S&P 500 comes out for now. And we have a Fibonacci time cycles, the model, pointing to today also. So today's a big day. And then we also have the lunar eclipse here coming up in 1 to 2 days, specifically early Wednesday morning. So now moving ahead here now, I'm going to start talking about this as one of the more fun times of the year because I start cranking out my annual longer-term forecast for the year. Usually it takes me, because some of these are based on January price action. And so here's my fractal, for example, for 2017. For the euro, the blue bars were the forecast published last February 14th to be exact. And then I overlaid the prices at the end of the year. You can see that worked out pretty well.
Sure did.
And then here's your, I know you like the currency, so I thought I'd use these as my examples. I got one here for in case you have a yen for the yen. Here we go. That worked out pretty well too. Now, you have some of these fractals, you have to flip them upside down. You play the old game show, Name That Tune. You get a few notes. If you recognize the pattern, then you go with that, and then hopefully know the whole song, and that's how this works. Once you see it following a particular track, the train is on a particular track, chances are it's going to stay on that track for a while. So there you go. So the inverted yen. The yen, by the way, has been one of my best over the last several years. It's been incredible. Every year it's tracking very well. All right, okay, now moving ahead here, I'm going to talk about my longer-term forecast models. I stumbled on the old January barometer. Maybe I'm sure you know about that, Larry. Maybe some of your listeners know too, that if you look at the January and what happens in January, is it up or down for the month? That's a very high batting average for what's going to happen for the year. Last year was every now and then things flip upside down, but it does have about statistically, I didn't do the math on this. I've seen statistical studies, though, that if you ran this since 1950, it had a 75% batting average, so that's pretty good. The only other model like that I know that works even better is the Super Bowl indicator. You're probably familiar with that, Larry, I'm going to guess. It basically comes down to, for the folks overseas there, we have the American football, it's the NFL, and that's split into two conferences. And the NFC, AFC, if the NFC team wins, that's bullish, and the AFC team wins, that's bearish. That is actually, it's crazy, but it's actually worked 80% of the time since the late 60s when there was like a falling out, there was a civil war within the football world there, and then they got kissed and made up and got back together. And so that was in the late 60s when we started having Super Bowls, and that's worked 80% of the time. Now, here's an interesting thing, because because January is, this is also related to my fractal models, the January barometer. It's so simple I can't give it out over the air here because then nobody would call me,
I know the feeling.
I can literally teach a 10-year-old to do this in 10 minutes, so that's, so when you take my class, I teach you how to do all this. Anyway, there's obviously, if both of these models are forecasting the same sort of thing, which they are, and if you know the answer to one before you know the answer to the other, you should be able to predict how the other one's coming out. This implies, this is just my theory, I have not statistically researched it or anything like that, but we'll see how it works out this year. That implies, since so far we've obviously had a big up January, that implies that the NFC team should win the Super Bowl. That would be your Philadelphia Eagles, right, Larry?
Yes, sir.
That would be probably considered an upset, because I think the Patriots are favored to win, right, or not?
Yes, they are favored. I understand. I don't do any of that kind of stuff, but I heard people talking on the TV about it.
I don't bet money
on
it, but it's just interesting to see which way the people are leaning, right? So anyway, that's my big radical forecast for the day. In addition to the lunar eclipse, that the price action of January is indicating that the Eagles should win. Maybe it won't win. It was all upside down last year. Last year was not it was an upside down year for these models. That would have, if that happens, we will have we'll have to reinterpret this stuff, and whatever the train or track the train is on, we'll follow that track. We're not going to be, you don't want to get stubborn with any of these forecast models, So that's the deal. So, yep. So anyway, that's my big, so anyway, if you would like to learn more about these things, get a hold of me. I have a monthly class that I do in the early part of the month, so you need to go hold me right away, or I have several people lined up to get a February individual class, about 5 to 6 hours. I'm going to basically go over everything I've learned in the last 40 to 50 years with these different methods. I do Astro, I do advanced Fibonacci time cycles, I do fractals, I do several different methods, and I also have a lot of experience in the trading world. I'm a former CBOE and Chicago Board of Trade floor member, traded on the floor there back in the 70s and 80s, and so forth. And so you can get a hold of me on, also have, this is a great time to get a hold of me, because if you want to learn astrology, if you're a GAN student, you need to learn astrology. And if you want to learn astrology, I have a quarterly course that I offer too, and that official start date is in February. So here you go. Here's my info here. I'm in sunny Florida. Most of the time it's sunny here. And there's my phone number, 239-594-3939. Best way. I'm going to be running away here right after the show for a couple hours, Larry. So if they want to get a hold of me right away, probably best just to send me an email at nwinski@embark, EMBARQMAIL.com, or you can Skype me at norm.winski. Any questions or comments, Larry?
No, it's really great stuff, Norm. We're going to have you on again pretty soon, and if something really crazy happens, I'll give you a call, and we'll have you on as a cameo spot here to discuss what might be happening, because these markets are, very, very exciting at this time of the year. We were up 20 out of 21 days in January. I don't think I've ever seen that, and for the Dow Jones, so that's really an incredible run. Hey, thanks for joining us, Norm. We'll have you on again soon. Norm Winski of Astro Trend.
Thank you very much, Larry.
Thank you, Norm.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability, and last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Mr. Z from the room coming on. Go Eagles. Are you there, John?
Yes, sir, Larry. Real quick question in these last 2 minutes. Just a question asking you to draw upon your history over 3, 4, 5 decades in trading markets. First observation, the S&P, the cash index, is up here at 2870. At this price level, this rally phase since February 2016, is exactly equal within a point or two of the point rally from October of 2011 to the high of 2015. Have you ever, in your trading career, watched and seen major market moves where rally and decline waves have lined up with exact length precision?
Oh, yeah, you have, John. We see that more often than you might think, but the problem is that the number of samples that you have are not that great, but you do see it. I've just posted a chart from Jim Flanagan from GAN Educators that shows very similar type of situation that you called here, but we're always looking for that repetition. But repetition, but I'm really focusing on 4-hour charts so that I can reduce my risk down to a very, very small amount. And I'm very interested, of course, with this lunar eclipse and new moon that we have coming in tomorrow. So I'm looking for some type of a reversal here in the stock market where we might get a 2-day correction, which would be a major correction. So we'll see. The other thing is to keep an eye on these grains because it really looks like they're getting ready to turn the corner, John. You've brought that to our attention, and especially the cocoa. Gosh, you did such a great job for us on the cocoa when it was $18.40. Now it's really close to $2,000 a ton now. So it's going to be interesting to see what happens with that one also. Hey, thanks for joining us, John. Yeah, go Eagles. Talk to you later, buddy. Bye-bye. Thank you, folks. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!